The views expressed in this video presentation are my opinions and not necessarily the opinions of guests and others sharing or reposting this video. The content is produced only for educational and informational purposes. Do not regard any statements in this video as a recommendation to buy or sell any financial instrument. Investing comes with risk to loss of principal. Always conduct your own research and seek guidance from a professional advisor. I am not a professional investment advisor. I'm Dollar Will. Let's make some money. Let's see, as usual, fam, I break away from time to time from my duties with my Patreon folk, and I come on YouTube to talk about the S&P 500, the all-important S&P 500, because our retirement account, most everyone's retirement account is tied to this thing. We have such pitiful options in our retirement account, so it's like, live or die with this S&P 500. So we've had this nice little euphoric run from the bottom here. Sad to tell you, I think it's over. I think it's over. We ran to this prior area of it was a support, but now it's functioning as resistance. Let me see, get that crap off. Oh well, wait a minute. Let me get the free information. This site right here, investing.com, for you newbies, it can give you some tips every once in a while. That's helpful. And you have here called a doji star, bearish. I agree. Especially when it happens at a critical area. If I can get this thing off the page. All right, thank you very much. Thank you very much for the doji star. Let me see if I can get it off this way. Go to another time frame. Come back to this one. Oh, come on. It doesn't want it. It wants to stay there. I'm pretty much done with what I needed to show on this chart anyway. Let me see if I can show it on a 4-hour. I got some other stuff I want to talk about. Well, I tell you, going down to the 5-hour, we can see trouble already that we made a lower low relative to here. Okay, and so this is we're looking at the futures market. So overnight, the S&P 500 trades on the futures market, and kind of gives you a peek into what's happening, what's likely to be the temperature, okay, the state of things tomorrow when the market opens. This going lower than here would really be problematic. Okay, making a lower low here is of medium concern. Going lower than here would be major concern. And this candlestick was created on the 9th at 7 a.m. So the 9th was Thursday, right? Okay, so we could open up in the morning. I mean, if this, in all likelihood, this is going to be lower than here by 9:30 in all likelihood. And should that happen, we will open up tomorrow having taken out the gains from Thursday and Friday, which would be technically, structurally, pretty significant. Okay, so I'm not going to belabor the point on this, because and then we also price came back to this floor, which is now the ceiling, and it's having difficulty. Price is breaking down right at this area, so technically that's a warning. But I never expected this thing to keep rising anyway. And sure, to technical form, it's running out of steam. All right, but let's take a little walk down memory lane when things were good, when everyone was hopeful. see. So we had this little rise from around let's say mid-March. Okay, and these were the winners. Oil, Noble Energy. We know that's not gonna last. That's gonna give that back. Um, Ventas. I looked this up. What is Ventas? Uh, Ventas. Oh, it's a REIT. Actually it's pretty interesting. This is a company I got to put on my list for when it's all over. It's a real estate investment trust, but they're they own the property that like healthcare facilities and retirement homes and senior centers where they're the tenants for their properties are healthcare facilities and senior centers. And so with boomers still being, and I'm the youngest boomer, and I'm 56, so we're gonna be around for a while. And so this is like a pretty stable source of income for their tenants. It's just that when the macroeconomics change, even good companies, if they're just in the wrong part of the economy, money will just flee that whole space. And real estate is one of those. Okay, this is not the time for it, but this is what I'm going to put on my list because they have properties all over America, Canada, and Europe. So this is definitely one. Now we know MGM, we know this is not going to last. I mean, we're shut in. We're not even going gambling. So we know this is fake. And Darden is a restaurant. How many restaurants are people going to right now? Okay. And besides, it's the wrong time in the economic cycle for restaurants. Okay. So we're in our economic, I almost said crisis. I just want to say contraction. It's a natural, normal thing for prices to go up to ridiculous levels. What's that term? Irrational exuberance. That's normal. And so are these corrections. Okay. It's just that this particular correction is correcting a trend that's more than that's about 100 years old. So I can't really make it break it down any more than that, outside of the Patreon group. It would take too much time. But yeah, this is all a mirage. This is my opinion, all right? But tomorrow when you start to hear about destruction in this area, of oil and this REIT and restaurants, think of dollar. So this is where the money went during the rise. Now, interesting enough, I have this chart that shows from the decline in February 20th to like now. And it's interesting to see which companies, how companies have fared, which ones have made out okay. Pharmaceuticals, that's not bad. So that's from the beginning of the decline to now. Well, this is gold. We know that's not going to. Well, I don't think it's going to. That's the debate. I'm like the only person that I wouldn't buy gold with your money. Okay, I'm like the only person. But you think about dollar, and in a couple of days, gold is going to be the big story that is going to bite it. Okay, all right. So Cabot oil, this is going to die too. No way. Looks like we, got something close to a double top here. It's not going. No way. No way. I'm going to get some more details about this in this. I don't know what this company does. Citrix is I guess you IT heads out there know Citrix. That's like a networking software that allow you to connect back to your main office and do file transfers and all that kind of stuff. They actually have a little bit more gas in the tank. They're not going up much more, but they seem to have a little bit more to go. I don't want to really get into it because there's safer things to invest in than to pour money in this tech area that's got like one more push. It's why when you can get into something that's early in the trend. And we know cruise ships, we know they're not going to recover. So pharmaceuticals, something to keep your eye on. We got to have drugs, got to have our medicine that's not dependent on economics. You're not going to stop taking your blood pressure pill because the economy isn't growing. It has nothing to do with it. You got to have it. So that would be something to keep watching. Let me see what else. Oh, this is that Cabot oil, I think. Yeah, this ain't gonna make it. I'm racing to get past stocks. Talk about bonds. All right. There's generally like an inverse relationship between stocks and I'll say bond yield. When I say bond yield, I'm talking about the government. A bond is a loan from you to the government in the case of a treasury bond. That's you loaning money to the government. A corporate bond is you loaning money to a corporation. A municipal bond is you loaning money to a state. So bonds are all the rage right now. So a lot of money will be leaving the stock market going to these bonds. You may have caught the headline that the Federal Reserve is buying corporate junk bonds. So this would be, I don't want to pick on Pookie, but I don't know nowhere else to say it, but this would be like a corporation that we would call Pookie. Okay. He don't pay his bills on time. No, he don't need to have that McMansion. These are corporations that are they're kind of struggling. And so that's why in the their credit rating is bad. They've been given junk bond status, and the government is loaning money to these corporations in the form of bonds. Some of these corporations you may work for, they can't afford to let a large number of big corporations go out of business. They don't want you showing up at the welfare office, so it's cheaper to keep them, So that's this TLT. Okay, so moving to another type of bonds, and this related on the other side. Okay, we got the yield side where when you buy a bond from the government, you get paid an interest rate for every year that you hold it. And the government is always in the business of selling bonds, meaning taking loans from you if you're willing to participate in it. Loans or paper sold years ago, like 20 years ago, 10, 20 years ago, they had a higher interest rate. And so a lot of folks would buy that old paper and get this higher interest rate payment. Well, this is the bond yield that everybody was talking about, that old paper that's, 10, 20 years old. Well, when those bonds expire, the government has to pay this debt. And so this is the bond bubble that everybody's concerned with, and it's rolling over. So this has been like pretty safe for a long time, but not anymore. We had a high, we came low, we didn't make it back to take out this high, and we're rolling over, heading south. So here's a fund here that shorts that bond. So when that old paper starts to lose value, this fund, the TBT, shorts it. And we got a higher high here. So this is the bond. This is so this is the bond bubble bursting, and this is a way to short it. And you should hear about this one in the news, especially if it crosses this red line. Okay, the TBT, it will become the talk. I never hear talk of this unless there's a crisis. Nobody ever talked about the TBT. And if you hear this the letters TBT in the news, that ain't good. And I'm telling you, you're going to hear it in the news. If we break this red line and go above this high, not if, when we break this red line and go above this high, you're going to hear about the TBT. because that's money leaving this old paper. Let me show you how long this thing has been running. Investing in 20-year bonds and circulation, when the interest rate was extremely high. Let me put it on quarterly. Really get down with it, get down. This is like safe to just invest in this. Oh, this don't go all the way back, but this thing goes all the way back basically to like 1983. It's just been rising pretty much ever since then. Well, that bubble is getting ready to burst. It's in the process of bursting now. And so savvy traders are shorting it with this. Okay. So a lot of folks running from the stock market are going to end up over here, taking advantage of this short of this old bonds in circulation, old paper basically. And then we got the new paper that the government is issuing. Okay. New 10-year bonds. This side is called the yield, okay? The yield side. And the government is just throwing money at the yield side, causing this to rise. So it's the new paper versus the old paper. And the government is throwing money at this new paper. So this is also where people are going to be throwing money when money leaves the stock market. So this will be something to watch. And you will hear in the news over the next week and beyond about the increase in bond yield. This is what they're talking about. This is one of the places money is going to go. Okay. Another reason why prices are going to suffer. OPEC and Russia approved the biggest ever oil cut to support prices. Okay, they were pumping out too much oil. We've had a glut in oil for a long time. Oil has been in decline since 2007. So that's about 13 years. That's how long oil has been in decline. We've had a glut for a long time. So OPEC finally decided to stop being gangster, and pumping out more oil, which was tanking the prices, which would snowball and put small and maybe some medium-sized oil companies out of business. Okay, so they finally got their act together and approved the biggest ever oil cut. Let's see what's up in this first paragraph. OPEC and allies led by Russia agreed on Sunday to a record cut in output to prop up oil prices. I still think this is going to be too little too late. I still don't think oil will stop falling amid the coronavirus pandemic, and said they had an unprecedented deal with fellow oil nations, including the United States, to curb global oil supply by 20%. Measures to slow the spread of that word have destroyed demand for fuel and driven down oil prices. We've had a glut for a while, straining budgets for oil producers and hammering the U.S. shale industry. That's their smaller companies in the shale industry, which is more vulnerable to low prices due to its higher costs. Right. So that's the deal. Now, oil going down. What's my name? What's my name? Say my name. Dollar Will. Oil going down strengthens the dollar. That's the main deal. That's all. That is where I'm trying to get to. And then there's this looking ahead of week. This is actually going to be a short video. Looking ahead a week. Look at this. Let's read this. Moving from oil to everybody's favorite except mine. Gold. I think I'm the only one that's not buying this crap that gold is a safe haven. This is going to be ugly. Gold is not going to end pretty. If this article can just come up. Okay. So there are a lot of theories as to why central banks and Russia in particular are cutting off gold purchases. Okay, central banks and Russia are cutting off gold purchases. What's the date on this? April 9th. So that would be what, Thursday? Yeah, Thursday. I'm gonna do a separate video on this. I'm gonna gloat on this one. When this thing rolls through, I'm gonna be gloating. Okay, I'm gonna tell you that right now. All right. Okay, cutting down gold. But in the case of Russia, the reason is simply that they need cash. We don't really need to go no further in this sentence. I'll read this again. There are a lot of theories as to why central banks and Russia in particular are cutting down gold purchases. So if they're not buying it anymore, how's it going to continue to rise? But in the case of Russia, the reason is simply that they need cash. What kind of cash you think they're going to need? US dollars. Okay. All right. The Russian government is strapped for cash. It's facing the pandemic that everyone else is facing, but it was slow to move on it. So it's got serious problems. Yada, 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 yada. It's losing money on every barrel of oil that is sold in Russia. So if you're losing money on oil and the dollar is rising, what do? You sell gold and oil and you move to the dollar. The US dollar is about to go ballistic. That's what's happening. And that's pretty much all I got. This is going to be real short. What am I trying to? I'm trying to get to this. Take that off. So who we got? OW. What's up? What's up? I'll be doing good. If this dollar spike and oil roll over, because I'm in that short for gold. I'm shorting gold. I might be the only one doing that, you know. But a lot of people going to run to that party, you know. And you know what? Let me take a look at the things that were short in the S&P 500. Let me show y'all those real quick. The two main ones are the main one. It's on my channel. It's called the Vegas Play, and it's TVIX. I don't know. It might be too expensive now for folk. Come on, my computer going slow. Come on. Let me bring up my screen share again. All right. It's TVIX. This is the one I was talking about called the Vegas Play. It's a triple leverage ETF. And it's pretty, actually, I think that it's double leverage now. And we see where it came from down here. It's getting ready to rise. And so it came from down here in $33, I think $38 area. And it went up to $1,000. Okay. So that's quite a run from February to 20th. 2 days, the thing went from $38 to $1,000. All right. And now it came back down here around, what do we got here? We got $243, and we got what's called a double bottom in technical analysis. That's where the price comes down and makes a low. I want you to look your eyes right there on the low. The L means low. It's 226.95. It's when the price hits a bottom, rises up, comes back down, and makes a second bottom, the double bottom, without going lower than the first leg. All right, that's a sign that we could be looking at a reversal, and I'm banking on it. I'm like, yeah, this is it. So this is 239 for the second low, and the first low is 226. So we have a higher low. So this low is higher than this one, and that is also a bullish sign. And this is for TVIX. So if this thing went to $1,000 here, man, it could get ugly. It could get ugly. This could get to $1,600 or something easy, $1,600, $1,700 from here. Pretty easy. it's gonna be ugly. But I'm not in this, oddly enough. This is one. This is one of them. I have nothing. Just as all entertainment purposes, I'm not in this one. But in disclosure, I am in this one. This is a small cap bear fund. So TVIX goes up when the market, when the S&P 500 goes down. All right. This one goes up when the small caps go down. I overthought it. I should have just stayed with TVIX. But my reason for going with the small cap one is my thinking was in a crisis, small companies, they don't have any cash. So if business is slow, they're gonna be facing bankruptcy. Okay. So bigger companies have cash, bigger companies can sell bonds, and they can survive. But these here, they die. And so I said, okay, let me short them. It did okay. It went from $33 around the low, and it topped out at 118. That's not bad, but it's not like TVIX, you know. So I don't have a clear sign here, not very clear, that that's a nice bit of encouragement that I have it kind of trading sideways with this candlestick side by side. But I don't have like a clear break higher. Okay, so but I'm still um, bullish on this bear market ETF. So when the market is tanking, that's a strong word. I'll be a little sensitive to the hodlers out there. People that think that it's a good idea to buy on the dip and buy quality companies because they're on sale. These folks have no idea exactly how much cheaper these companies are going to be. Okay. It can always get cheaper. You can't use your instincts on this. You really can't. You really can't. You got to get some training. Get your game tight. Learn some technical analysis. I'm gonna emphasize that technical analysis. That's what you want to study. All right, not fundamental analysis. The fundamental analysis crowd, they're asking the technical crowd these days, how much lower? In a crisis, the fundamental crowd turns to the technical crowd. So which side do you think you need to learn? All right. Learn the technical stuff. All right. Let me see who's rocking with me. Oh, Glendon. Okay. Good. Yeah, I check that brother out, OW. I check him out from time to time. I'm glad to hear that he's not on the he's not a gold bug. People, let's say rational thinking that gold always goes up. For the last year, so people know on this channel, I've been pretty much kind of clowning folks to think that real estate always goes up and gold always goes up. There's no such thing as always. You have to think. There is no safety. I gotta call it like it is. There's no safety in ignorance or apathy. There is no safety in ignorance or apathy. You gotta think. There's sharks out here. We trying to get your money. It's smart money and dumb money. No hodling. You gotta learn the game. There's a thing called sector rotation. You can look that up. You can Google it and get some free game. Sector rotation. There's a playbook of how money rotates from growth stocks to other sectors. Okay, and I'll be bringing them up as they get safer. Groceries is one. Let's see. What's up, Lionel? What's up, Doug? What's happening? What's up, Rael? Let me see what else we got. Cool. Well, I'm gonna shut it down. I'm gonna try to get me some get my stamina together because I want to do a video. Hopefully, I can do it tonight on marijuana. I haven't done an update on that. Yeah, I don't want to say too much about it now, but yeah, because that one is worth looking at. It's worth checking out. It went a little lower than I thought it would, but I'm not giving up on that one yet. not giving up on it. That's all I'm gonna say for right now. But it's worth watching, keeping your eye on. It's worth watching it every couple of days, peeking at it. You know. But I'm gonna shut it down. Thank y'all for rocking with me. Stay tuned. I'll let y'all know, what I see as I see it. But how I'm rolling right now. I'm in my TDA. I like that. Shorten the market. It's risky. Um, if you're not a chart reader, I don't recommend it. Remember everything I'm saying is entertainment purposes. I'm just a YouTuber. Seek guidance from your financial advisor. Take some of the ideas you hear me talk about and go discuss it with your financial advisor. And together, that person they know you better, know your goals and objectives in your financial situation better than any YouTuber, especially a non-professional YouTuber like me. Use the professionals, but take some of the stuff you hear and say, hey, I heard this. This guy was talking about bear market ETFs. How about that? And your advisor will give you their opinion. You can say, hey, I heard about the TBT, which shorts the TLT. The old paper. That old bonds that have been in circulation for 20 years. The TBT shorts that, and I see that that's rising, doing pretty well. What about that? And do what your financial advisor says. It's not, and again, this is just my opinion. You don't have to always be in the market. And my personal opinion, and that is the most ridiculous damn piece of information that I hear so-called professionals telling people that they should just stay invested. Meanwhile, you watching TV and you're watching the richest, most powerful people in the world. They're selling. You, who have less money than them, you're told to just hang in there. Now, you tell me what kind of sense that makes. Somebody bullshit you. I don't know why people stand for it. It don't add up. This is not people like you and I that's selling that caused the market to drop 5, 6, 7, 8%. This is the richest people in America. The 0.5%, not the 1%, the 0.5%. Okay. Half a percent. What would that be? 0.05? Would that be it? Yeah. Yeah, I think that I had it right the first time. Right. Yeah, it's the uber rich. That's who's selling. That's who has the kind of money to make a market drop. Uh, anything more than like 3% or more. That's not you and I. Okay. So they're telling you that you should just ride it out. While you riding it out, the richest folks, they have so much money in the market. It takes them a long time to take $1 billion out of the stock market. A very long time. You and I, we can get ours out, but the push of a button in a second. We don't have that much money, but they're telling you to keep the faith. But the richest people are not keeping the faith. Only thing they're doing is you and I keeping the faith while the market is declining. All that does is keep the order, them on top, and us, the slave class. That's all it does. But I'm gonna leave that red pill alone. All right. I'm out of here. Peace.